Somewhere today, someone is going to turn down a raise because they believe it will put them in a higher tax bracket and cost them money. When a national tax literacy poll asked how brackets work, 51% of people got it wrong, believing that crossing a line reprices all of your income at the higher rate. It's wrong. It has always been wrong. And the real math takes 90 seconds. The myth version: your income is one block, and its tax rate is set by the bracket you land in. Cross the line by $1 and the whole block gets the higher rate. Your take-home drops. Gray here just turned down $5,000 to, quote, stay in the 12% bracket, and he's proud of it. If the myth were true, he'd be right. The IRS has never worked that way. Here's the actual machine. Your income fills buckets, in order. The first bucket, your standard deduction, $16,100 in 2026, is taxed at 0. The next bucket, up to $12,400 of taxable income, at 10%. Then 12%, up to $50,400. Then 22%. Crossing a line doesn't reprice the water already sitting in the earlier buckets. Only the dollars that land in the new bucket pay the new rate. That's all marginal rate means. The rate on your next dollar, not your last dollar, not all your dollars. Run, the raise Gray was afraid of. Single filer earning $65,000 offered $70,000. After the standard deduction, taxable income goes from $48,900 to $53,900, crossing the 22% line at $50,400. The first $1,500 of that raise is taxed at 12%, $180. Only the $3,500 above the line pays 22%, $770. Total extra federal income tax, $950 on a $5,000 raise. Gray keeps $4,050, 81%. Now run it the myth's way. The whole $53,900 repriced at 22%. Gray's tax bill jumps by $6,200. His take-home would drop $1,238. That's the monster under the bed. It does not exist. Payroll and state taxes take their usual bite from every dollar, raise or no raise, and they never change this story. There is no raise amount where federal brackets alone make your take-home go down. Not $1 of one. That math is the whole channel. Run the numbers, keep the decision. If that's your thing, subscribe. It's free. Honesty segment, because the fear didn't come from nowhere. Brackets never punish a raise, but benefit cliffs can. Some assistance programs, subsidies, and credits cut off sharply at an income line instead of phasing out gently. Near one of those specific lines, a raise really can cost more than it pays. That's real, and it's about how those programs are designed, not how tax brackets work. The rules and the lines change year to year, so if your household is near one, that's a moment for a real professional with this year's numbers, not a myth and not a YouTube video. For everyone else, the staircase never bites. So, brackets are a staircase, and every step up only reprices the step you're standing on. Take the raise. Gray took the raise. Always take the raise. And if you want it to matter, the earlier episodes show where to park it. Every number tonight is sourced in the description. I ran the numbers. You just have to take the step.